people shouldn't be running our economy, a bunch of academic people who've never run a business. So, I mean, this is insane that economists, and particularly the Federal Reserve, thinks it's their role to keep our economy growing and to fight off recession. Get out of stocks now. The next wave is going to be even more painful, and that won't even be the bottom.
In today's video, Harry Dent, author of 0 Hour, talks about what's up with bonds, the next moves of the Fed, the raging inflation, and the coming recession. Dent has been predicting a great reset of the biggest financial asset bubble in history. The market historian predicted a painful crash in stocks and an economic depression, and discusses the next moves before the big crash. He believes that the top is in and the Fed is tightening aggressively. Could the markets make a new high? Before listening to him, please ensure to smash the like button and subscribe to the channel.
A lot of shocks. 3 banks in the US have collapsed. Credit Suisse is being taken over by UBS. First Republic Bank was having issues. What is your take on that, and how does it play into your overall extremely bearish forecast for the markets here?
Okay, yeah. Let me start out with one comment, because I used to get criticized, especially in the late 80s and early 90s, for being way too bullish. They thought America was done, Asia, Japan was going to take over the world, and we were, be slaves to them. And now, after being the most bullish guy in history, even predicting a Dow of 35,000 way back then before this thing would peak, which people just thought was stratospheric. Now it's like, oh, you're too bearish. Look, don't blame me for the greatest boom and bubble in history, and great bubbles, without any exceptions, always crash bigger than normal bull markets. So in fact, I had to, in the early 2000s, update my demographic and cycle work for really studying bubbles when I realized, oh my gosh, that 95 to 2000 run, that was a bubble like 25 to 29. And my research says it's not over yet. The baby boom is going to spend much longer. So don't blame me for the most extraordinary times in history. And you can't have a great boom without a great bust. So we shouldn't be complaining about this. And America is still the strongest of the developed countries in the world. And we're seeing our Asian competitors, Korea, Japan, and emerging China, kind of peak here and leave the way for the rest of Asia, Southeast Asia, and India to increasingly dominate the next boom. So first point is my specialty was in the beginning, not just cycles, but I discovered demographics, that people are predictable. And in the United States has the best data on this. The Bureau of Labor Statistics, they track, thousands of people every year, exactly what we spend when we invest, when we do anything. We buy, startup homes, trade up homes, cars, you name it, potato chips. I can tell people when the average household spends the most money on potato chips as if it mattered, age 42. Why 42? The average kid's born to them at 28, and they're eating the most calories and junk food at 14. So what I do is I make that silly example to show how predictable things are, not just macro, when the spending peaks for the typical developed world, Europe, US, Japan family at 46 to 47, and then declines, but even down to potato chips or motorcycles or first home buying, vacation travel, anything you want to look at. There's 600 categories tracked regularly by the US Bureau of Labor. And I know when people spend pretty much on everything, and economists somehow didn't discover this and somehow don't think it's that important because they think, oh, it's all about fiscal and monetary policy. Well, what we have now is desperate, very desperate monetary policy since 2009, when I predicted, not then, but 20 some years in advance, in the early to mid 80s, that this baby boom driven boom from 83 would peak in 2007, and we would enter a slowing period after that, 2008 forward, into right around now, 2022-23. I predicted that way back. The problem is governments panicked when it looked like we were heading into the next Great Depression. And by the way, Ben Bernanke was the Fed chairman then, and his thesis was the Great Depression. So he was the first one to say, holy smokes, no depression on our watch. And they've been printing money. They thought, oh, just a year or two after 2009, we'll be back to normal. No, my stat says there is no getting back to normal until the next generation, the millennial generation, starts their spending boom from late 2024 into late 2037, just like I predicted late 82 to late 2007 for the baby boom. So in between, we've had this massive money printing, which has created a massive second stock bubble and tech bubble to that first one that peaked in 2000, then the overall peak in 2007. That was right in line with the demographic cycle. But this panic and massive money printing, and in fact, just since COVID, $5 trillion in new monetary stimulus from the Fed and $5 trillion committed to fiscal expansion, which is even more inflationary. And surprise, surprise, Elijah, we have suddenly gone from 1% to 2% inflation to 9.1% inflation. Oh, and now they have to tighten. Here's the point. These people shouldn't be running our economy, a bunch of academic people who've never run a business. So, I mean, this is insane that economists, and particularly the Federal Reserve, thinks it's their role to keep our economy growing and to fight off recessions. Recessions are just as important as booms are to the economy. And just like we're awake about 16, 17 hours a day and asleep 6 to 8, the economy booms for 25 to 26 years, like 42 to 68, and then declines from 69 into 82 when generations spin and then slow till the next comes, and all other types of cycles like this. So the economy needs to grow. It also needs recessions. It needs the recessions clear out the dead wood. The smartest people in the world are park rangers. When they get forest fires, 9 out of 10 of them, they don't fight them unless they're going to take down the whole forest, because they clear out the underbrush and make the whole system healthy. Recessions are like common colds and other things, and forest fires burning. They make us healthier. And Federal Reserve and government officials, nobody wants a recession on their watch, so they fight recessions, which is the stupidest thing you can do. And so this is not going to work out well. We have overstimulated our economy since 2009. Stocks have gone to massive new highs when they should have drifted lower over 12, 13, 14 years. And now we're going to have the big crash at the end. Remember, we have to go all the way back 2 generations and 2 technology cycles to see a bubble boom like this in the roaring 20s, a massive crash, 25% unemployment, 89% down in stocks in the early 30s to wash all out that bubble. This is the first bubble economy since then. Governments have created a second bubble on top of the first one that would have peaked, a little earlier in real estate in 2007 for the overall economy. And so now we have second major bubble in real estate, second major bubble in stocks, and it's going to have to come down to reality, shake out all types of bad debt. We have record zombie companies. These are companies that are barely alive only by not paying their debt service. Okay, so those are the zombie companies. All of these on records. We need the economy to shake out this stuff for a couple of years, and then we can have the next boom with millennials. If we don't let this happen, and the truth is, I think it's already now happening anyway, finally, because the Fed slipped up here. The millennials aren't going to have much of a boom because they're going to be carrying all the baby boom debts and zombie companies with them, and it'll compromise the economy. So this may sound funny, Elijah. I feel like this downturn is exactly what the economy needs, and it's been put off way too long. If we'd have done this if the 2008 downturn had just lasted another year, a little more, been more like the early 30s, clean out all the bad debts and zombie companies, we would be in a much healthier economy now and not need a bigger crash than ever. We're going to see the crash of our lifetime. I think it just started. November 22nd for the NASDAQ last year, January 4th, 2022. The year 2020, January 4th, 2022 for the S&P. That was the last major index to peak, and they've been peaking for a year, coming that all around the world. When you see one index peak around the world over a period of time, that is not a short-term correction coming. That is a major long-term top. So that's been a confirmation for me. I also told my subscribers that I won't know that this is really a top until we see what every bubble has seen, a minimum 28% first crash, maximum 50%, And so we did finally get that. We got 28% in the S&P. We got 38% now in the NASDAQ. That says to me, 90-some% chance this bubble has peaked forever. And now we're bouncing for 5 months. It's about as long as any major bounces and as long as the one after the first 29 crash started. This bounce, I think, is near its end. And in the next month or two, we're going to see stocks break to new lows. And my magic number, Elijah, is very simple. 10. I'm tracking the NASDAQ because it's the more bubbly of the major indexes and leading this whole thing up and down the bubble. 10,088 is the line in the sand. We break below that. I think it's about 9% below where we are now, something like that. We break that. A next wave down is going to be at least as big as the first wave, probably bigger. We're going to go back to the 2020 lows, which will put stocks, the NASDAQ down 59%, the S&P down 53%. And then people will know first, the government was not able to prevent this in the end because they got caught tightening because they overreacted to COVID, which was a natural virus. Why would you print $10 trillion of stimulus to fight a virus that's going to go away on its own, just like the influenza did in 1918-20 anyway? That's where they blew it. They kept stimulating, and they keep managing. They lost control by overreacting to COVID and forced themselves to tighten. Now they can't just pull back and loosen this quick. So they're tightening a little less, but they're still tightening. And I'm telling you, the economy cannot take this because the fundamentals I study, which are the best in the world, the demographic trends, the most predictable fundamental trends of when people are going to spend money in any country in the world, US and Europe, they are peaking. They are down at their lowest point now. So the economy cannot take this tightening. And when it does fall, and I think it's going to fall faster, and this next wave in stocks, again, you study technical charts and stuff, another thing I do in depth, the next wave would have to be, the third wave is usually the strongest. The next wave down, you get a one wave down, a two wave bounce. We're in that two wave bounce, rolling over into a third wave. The third wave is larger than the first wave, and that's going to take us into 58%, 60% down stocks. Then everybody's going to know we're in trouble. And then the Fed say, we need to print 20 trillion instead of 10. I think people are finally going to say, sorry, you did that already. And my greatest hope, what will make all of this craziness a positive long term, is that we never let central banks run the economy again. What did Adam Smith say? He was the inventor of free market capitalism in the late 1700s, okay? He said, the invisible hand is the secret, a bottoms-up economy where businesses and consumers just vote and do their thing, and it grows by itself. Government should keep hands off as much as possible. Well, what happened in the 2008 downturn, which was predictable, nothing wrong with the economy. I predicted it decades, as I said in advance, not just a couple of years because stocks were overvalued. It was due to happen. They panicked and took over the economy like they're smarter than God in the free markets. And that's going to go down, I hope, is the biggest mistake in history, and get the Federal Reserve and central banks around the world out of the running the economy business and just be there in emergencies when money supply, when you really have a real emergency, okay? So I think that's the good that comes out of this. But I'm telling investors, just because stocks are down this much, if you missed it so far, this has been a darn good bounce. So you haven't missed as much as you thought. This is the last chance to get out of stocks, and real estate clams up much faster than stocks, and you just can't even sell real estate at some point. If you got real estate, a second house you don't really need, or you're thinking as an aging baby boomer of downsizing from your big house, now the kids are left to a smaller house, do it now. And if you can, rent for a while, because real estate takes the longest to turn around. In the last crash, before the government cut it off about a year short, it took, stocks turned around in a little over a year and a half. Real estate took 6 years to bottom. So real estate is where you really have to watch it. If you don't love it and going to live it for life, I actually bought a house in Puerto Rico because it was such a bargain. And it could go down 40% and I would still be 40% ahead. And I just bought it 3 years ago. Okay. So I actually did something I told my subscribers not, but I got a really good deal in Puerto Rico. Is a different market because Americans are moving here, rich Americans, average 20 million net worth are the immigrants coming into Puerto Rico from America for this tax program to support Puerto Rico. So I don't think my house will go down nearly as much. And by the way, I'm predicting, and this will sound high until you remember last time, housing, the average house went down 34% in the last downturn, 2008 crisis, okay? I'm just predicting 50% this time. That is going to be the biggest shock. Stocks go down and come back quicker. Housing doesn't. And I've got a quote in one of my newsletters said, real estate will never be the same after this peak because the millennials, the first time a smaller generation has followed a larger in all of modern history, and this is around the developed world. And China is the first emerging country to have that happen. They will never see their demographic trends weaken from now on, and then successive emerging countries will see this happen over decades. So demographics is predictable. Demographics say we're way, way, way overvalued. We were already overvalued in 2007. Now with all this stimulus, we're aware of it. Get out of the way. Sell any unnecessary real estate, and absolutely on this bounce, which is very close to over, if not over in February, already starting to head down. Get out of stocks now. The next wave is going to be even more painful, and that won't even be the bottom.